We're going to have a look at currency indexes with Lloyd. We're going to follow that up by some US dollar, especially stuff from Orlando. Stay with us. We've got Gordon Scott on stocks, and we've got Geoff coming in to do the traders, the technical analysis, his 2 cents worth. Lots to come, so make sure you join us for all of that. Starting off, Lloyd, I always look forward to this part. What's the currency indexes telling us this week?
Hi, Paul. I'm just going to go through the 2 trades which I took last week. Both of it actually didn't trigger, which is a safe thing for me. Yeah, so last week I actually didn't take any trades off the currency index. Now for this upcoming week, market looks a bit messy to me. Yeah, so going to be a bit kind of conservative going about it. Now, what this week shows to me is that interestingly, I think that actually British pound should have more strength going forward. No doubt it's in a range, but it's actually bouncing off nicely at the bottom of the range. So going by this and looking at the price action, it should have enough strength to go all the way back up to 140, possibly beyond. But I'm not banking on that. But at least to the 140 level, it should have enough momentum to go through. Now, the Swiss, again, for the last 3 weeks, I've been saying that price would be actually traveling back up towards the horizontal level, which is at 110, and to the trend line. So this would be a good area for us to look for any reversal. But till then, I'm still banking much on the strength of Swiss. Now, Euro, you can see that price very nicely broke the horizontal level, possibly coming back for a retest. Yeah, so it should have a bit of space to coming back. But on saying that, it doesn't have really a lot of leeway to do that. So I'll be much cautious on trading the Euro currency for this upcoming week. Now again, dollar, it broke the horizontal level, but not in a very strong manner. Seems to be coming back to test it. But usually such a weak retest, I would tend to stay away from it. Yeah, usually the way that I trade it, I would hope for price actually does this. Yeah, it does not have a very, very nice curvature. So it seems that the dollar bulls are ceding some space out. Yeah. So again, the advice is that if you don't see a very clear-cut strength, try to stay away from the movement. CAD. So last week we say that the currency of Canadian dollar is riding on the strength of the oil, I suspect. But whichever that is, it did actually break the horizontal level, still maintain above it. Yeah. But we can clearly see that the price action that is on here isn't a clear-cut sign that the bulls are in control. So I do suspect that they may come back and retest the 80 levels before we can see any very clear-cut movement of where it wants to go. For all we know, this might actually just be a false break, and then price might actually just whack back down again. Yeah. So again, this is not a very, very clear sign of where price wants to go. Kiwi, troublesome pair. Overall, it does look as if it's sloping down, but I wouldn't really bank much on this movement because another picture that we can see that price is really ranging. Yeah. So this is a very tight range that is much more harder to trade. Yeah. So I much prefer to actually trade in a range. If it's larger, then you have very clear-cut boundaries. Yeah. For prices like this, I tend to stay away until it gives us clarity where it wants to go. So looking at what Kiwi is doing now, I may very well be staying away from Kiwi for the next 4 weeks or so until price actually does this, or does this, which is on the weekly time frame. Then I will have a clear-cut direction as where to trade it. Yeah, tight ranges are one of the hardest condition for me to trade in. Now yen is interesting. So last week I mentioned that yen might be on a free fall down, but I was obviously wrong. So it tested the 88 level very, very nicely and seems to be bouncing, but not really bouncing. It may just be a retest before it actually follows its momentum downwards. As such, this coming Monday and Tuesday, I'll be very interested in looking at yen. Yeah. So if on the 4-hour time frame, we can take a look at 4-hour time frame this moment. Yeah. So this is actually what happened on the 4-hour time frame. So if price actually maintains below this level and decides to actually pop back down, I think we'll have huge momentum behind the Japanese yen. Yeah, so we can actually jump in. But we need to see if on Monday morning they decide to defend this level. If they decide to defend this level, then we might see this instead. Yeah, so for the first 2 candles on Monday morning, this will actually the Japanese yen might be an interesting pair to actually get in, depending on what they want to do exactly. So we can easily pair this with either the stronger currency, the Swiss or the pound, and then we can go for. Personally, when such things happens, I tend to go for a good ride, usually 4 or 5 risk to rewards. And then the weakness of the bunch, So last week I was saying that the Aussie currency might come back for a retest, and indeed it is a retest. So I'm looking for any possible short positions for the Aussie currency. Now, for the upcoming week ahead, what I'm looking for is actually to trade pound odds. So we already see pound having a double bottom, so it might give out a triple bottom, but if it does not, I think it's perfectly okay. Always waiting for price for a break, a classic break and retest before it actually jumps in. Yeah. So within the week, the 4-hour time frame gives us plenty of opportunities to observe that. And the next one, which I've been looking for, is actually the Aussie Swiss. Yeah. So price already gave us a lower high, so it already broke the last low. So I'm interested to see if price will actually break the horizontal level and the trend line to see if it's give us a short trade opportunity. So this will be the 2 upcoming trades I'm looking for next week.
Thank you very much, Lloyd. Always fascinating to see how this stuff plays out for you. Much appreciated.